Our brains are perfectly designed to lose money in markets. If you do what you think you should do, you will lose because you wait until it feels safe to buy. When does it feel safe? When the market's doing this and everyone else is piling in and it's been green for 2 years. Bitcoin is now being used to respond to the world around us. People are using it to trade off sovereign debt concerns and, incompetent governments and you name it. Bitcoin is behaving more like an asset that is responding to the world rather than the world responding to Bitcoin.
Hello guys, welcome back to another episode of Tapping Into Crypto. Today we've got another guest with us. We have Mr. James Check, aka Checkmate.
G'day fellas, how you doing?
Yeah, good, thanks.
Very good. What a name, what a name.
I know.
I think you were telling us just before this it's a pseudonym?
It is. I got pseudonyms on pseudonyms on pseudonyms.
Yeah.
And the story was in 2018, when you get into this space, if you know what you're talking about, people think that you've come from billionaire wealth in like 2013. They didn't realize I'm down like 90% and I've bought the top and I'm completely wrecked. So I went with a pseudonym because I was also living overseas. And Checkmate was just happened to be the name that came to be. And by the time I started moving into my time at Glassnode and then now Check on Chain, people had no idea who James was, but they knew who Checkmate was. So it became part of the brand.
It's great. I've known about Checkmate for a while because I was following Collective Shift. You provide some content on there, but I never actually saw your face, and
yes.
You're just a very tall Aussie bloke with long hair.
And for a long time, because all the Glassnode videos was faceless, because my face wasn't the product. But now you start your own business, the person is the product, so it switches around a bit.
You got to be a bit more reputable.
That's it.
Yeah.
Now prove them a real human.
Yeah.
You know what the funny thing is, because I did so many years of content where it was just my voice in the charts. And I did the occasional webinar here and there where the face obviously has to come out.
Yeah.
And I kid you not, in 4 or 5 separate instances, the comments would always say, wow, I've just seen your face, but I thought you were like a 40, 50-year-old. It's always this combo, 40 to 50, bald oil trader. I don't know why, but apparently my voice comes across as a, crusty commodity trader.
Yeah. I just always saw the content, like the written content. I was like, I reckon it's because you're big on the on-chain stuff. I thought you were going to be like a real nerdy guy, and then you just come in, long-haired Yahoo,
Surprise.
7'5". Yeah. Quite the opposite. But, we'll do a bit of an intro.
Yeah, on that, do you want to give everyone, a little bit of an intro on what is on-chain data?
Sure.
And even just on that, expand on how you got into the space, just
yes.
quickly.
Yeah, so I bought the 2017 top.
Me too.
And the Pico top, I might have bested you because my purchase price was actually, when you factor in the extra fee that Coinbase had for Aussie dollars, it's above the top tick of the chart. You couldn't have bought higher than me if you tried. So I got that accolade. And at the time my background is tunnel engineering, ground engineering, basements, anything in the earth. Now that field of engineering is a lot of probability, a lot of risk, a lot of incomplete information. And I discovered Bitcoin by buying the top. I didn't understand it until it bottomed in 2018, like $3,000.
Okay.
And at around this time, on-chain data started being developed. So Coinmetrics came up with the first real quantified metric called the realized cap, which is just super important. Rather than the market cap where you look at every coin at the current spot price, which is obviously impractical, the realized cap values every coin when it last moved on chain. And this means that Satoshi's got 1 million coins, but they're worth 0 because they haven't moved at a price.
Yeah, okay.
And the guy who bought today at all-time high is 111K. So once you've got that concept, you can say, well, if someone bought at 50K and sold at 90K, they've locked in a profit. If the guy who bought at 90 then sells at 75, he's locked in a loss. I can now see money coming in and out of this network. So that was kind of the first metric. And there was something about this thing. I don't know why. I mean, I was literally downloading random PDFs off the internet and my friend's like, what are you, insane? I'm like, I don't know, this feels important. And I kept reading about this on-chain data as it was developing. I started, playing around with CSVs and inventing metrics and trying to work out different ideas. I think I would have done the first YouTube content. Sounds like I'm sitting in a tin can, but it's me just explaining the realized cap, explaining NVT.
Well, who else was out back then? Was it Willy Woo?
I mean, this is the era of Willy Woo, Dave Puel, who's now a good friend of mine, Murad. Yeah. There's very few people. Chris Beniski did some work on it.
Yeah.
So there's really a handful of guys who are coming up with these metrics and ratios and ideas and primitives. And in 2021, I'd written enough content. I had a small subscriber base. We're talking 20, 30 people. And one of them said, by the way, this company called Glassnode, who's in the on-chain space, they're hiring a data scientist. And I said, well, I'm not a data scientist, but I've taught myself Python because I used to download CSVs from Coinmetrics, plug them into my spreadsheet as an engineer would, update all these charts. I'm like, this is just too laborious. So I taught myself Python to automate this whole thing.
Yep.
And that code is now still running today in Check on Chain. That is the back end of our charting suite. I've been building it since 2019. So anyway, I joined Glassnode. I was their employee number 8, I think. Built up their analyst team. We had 4 people at the peak. And really, when I joined, they said, look, I said, I'm not a data scientist. First thing I said in the interview, I'm actually not a data scientist, but I know what these metrics do. And they go, well, that's good because we've got a team of data scientists and very few of them know what any of these things do. So I'm like, well, this sounds like an interesting match. So anyway, what we kind of realized is that we actually need to explain to the world of traditional finance and everyone that you can almost take snapshots of what's going on in Bitcoin and any other chain. You can see when people buy high. You can see when they sell low. You can visualize herd behavior. You can see the smart money. And we just basically plug all this information together. And it's a whole new lens. It's like having X-ray vision at the poker table. You can't see all the cards, but you can see when all the smart money starts selling. And you can either ignore that or you can go, they seem to always sell at the top. Maybe I should at least maybe not buy as much at this point because there's a bunch of people selling on my head.
Yep.
Anyway, and then the last thing was starting Check on Chain, which we've just crossed our 1-year anniversary. So
Congrats.
went out on our own. Yeah, running your own business. And it's just me and my best mate. So it's
That's
good fun.
Love that, mate. Quite the backstory and quite the resume. So for anyone that doesn't know, Glassnode's probably your leader in terms of on-chain analytics. Probably today. In a year's time, we might see Check on Chain overtake.
Yeah.
But
yeah, well, I mean, our product is very different. So the thing is, there's a lot of data providers out there who produce the data and the metrics and the APIs, and that's really going to appeal to people who want to trade, right? They want to automate stuff. My kind of core focus is there's a whole bunch of us in the world of Bitcoin. And we're a Bitcoin-only product because I'm of the view, look, there's 1,001 other coins out there. In fact, 1,000 is very much underselling it.
yeah.
I over all my time, I've just come to the conclusion that Bitcoin is the signal, and I just focus on my time there.
Yep.
And even if people are into other coins, they still, Bitcoin still is your climate and your weather. So if you understand what Bitcoin's doing, you're going to have a better idea of everything else. But my thesis was there are a bunch of hodlers out there, and our catch line is we're your Bitcoin personal trainer. And the idea is we're going to say a lot of the shit at the same time over and over again, but those repetitions, when it looks like a scary dip, your gut instinct's going to kick in and go, actually, you know what? There's a bunch of people who bought high, selling low right here. I'm actually going to step in here. And when it's overheated and the smart money is selling, you're not a deer in the headlights going, but what if I keep holding? You go, no, I've already made my decision 3 months ago.
Yep.
Now I'm executing. So the whole idea is to help hodlers know why the market's doing what it does.
Yep.
And I say this all the time. I cannot predict the future. No one can. The best we can do is pre-plan our decisions if we go up and if we go down, because that's all you can control. If we go down to 75K, which we did, if we go to 75K, what are you going to do? Are you going to be a deer in the headlights and go, why is the market selling off? Or are you going to say, that's my plan, I'm going to execute and step in and actually buy this dip?
Yep.
And if we go up to 150K, which is where a lot of my models are going to be quite overheated at the moment, what are you going to do? For me, as Check the Hodler, I'm probably just not going to buy as much because I've done that. I've bought the top many times, but at 150K, I can't in good faith plow my life savings in because I'd be ignoring all the data I have at my hand. Doesn't mean 150K will be the top, but it's probably going to be a top at some point in that zone.
So are you accumulating? Are you trading? Are you using leverage? Because it's just Bitcoin, right? It's super simple, but are you trying to trade for, short profit and profit?
No, my strategy, so I got a few levels there. So as a hodler, I'm a straight hodler. And in fact, I can trade, but I do not trade. People ask me all the time, do I trade off my information? Very rarely. Sometimes I play around with options, but just when I want to have a punt on things. Usually when the market goes dead quiet. There's been 2 instances of this actually. One was in August 2023, and the other one was actually very recently, right before the sell-off that we had.
Yep.
The market went so dead quiet
That February.
there was just zero volatility.
Yeah.
And I've seen this twice now, and in both instances, I did the exact same trade. I just bought a call option, I bought a put option, I walked away.
Yep.
Because the market, either Bitcoin is a stable coin now, or it's about to get really volatile. And I just always bet on the latter because it's going to get more volatile. So I don't trade. I actually don't recommend people trade. I don't write for traders. I actually write for hodlers. And I think a lot of people think that you have to be trading. No, you actually just have to train your mind to be ready to deal with whatever the market throws at you. The market's just information. All I want to do is process that information ahead of time. And I mean, my net worth is in Bitcoin. So it's amazing how much, if I put $100 perp trade on and I'm down $30, my mind's going to be worried about that $30. It doesn't matter that my whole net worth is swinging around with the same price. I don't think about that at all. But I do think about that $30 perp trade. So I just found that trading isn't for me.
Yeah.
I love just being long spot. And to me, the market's a big puzzle. I just love solving it.
No, I like that. And there's no like wrong answer to whether you're a trader or hodler.
Totally.
But because we had Joe Shu on just recently, and obviously he's more trading focused. Pav, I know, is trading focused. But for me, like I don't, I work a full-time job. I don't have a heap of time to be, analyzing the charts. And so I'm more in the hodl space, as I think a lot of people would. And I think there's nothing wrong with that as long as you have a strategy as well.
Find your zen.
Yeah.
The thing about markets is you have to find your zen, and too many people think that trading is an easy process. It is not.
It's a battle of the self.
It is. It is a battle of the self, and I don't know what the actual stats are, but I would wager it would be less than 0.1% of the population is like actually mentally equipped for what you need to be so unbelievably emotionless and just operate like a robot. It's a whole job. And I knew that I wasn't a trader because I lived in London for 2 years, and that's where I was really like learning about markets. This is what I'm discovering on chain. And the amount of times I created an Excel spreadsheet for my trading journal, I created more Excel spreadsheets of the journal than I ever put rows in the journal. That's how I knew, like I learned the trading psychology, but the actual execution, that's a whole different animal. And I now actually get to the point, I've done this like probably once every year. I do this. I send money to $1,000 to a perp exchange. I'm like, I want to play this range. I usually withdraw within 2 days because I'm like, I just can't be bothered.
Yeah.
I don't have the time anymore, right? Look at all that spot coin. I'm just going to hold it.
Yeah, no, good shout. I think you touched on it a lot there, but I think one of the things that I sort of grabbed onto was you mentioned like the data analysis you provide. It's different in terms of, I guess, what a lot of other companies do, like just being able to be able to articulate to other people when to step in, when not to buy, like what a top looks like. The trader part of me again would come out and say, okay, well, other people's emotions is like what I look to sort of read in the market. Like Twitter's a great one for that, or even just the people around me, to be honest, and myself. Do you find like on-chain data can give you like that reading of FOMO, like on-chain?
Absolutely.
Like, yeah, can you talk about that a bit more?
Totally.
What that looks like?
Yeah. So this is what I love about on-chain data. It is human behavior in markets visualized.
Yeah.
So we are herd creatures. We're herd creatures and we're risk averse. And there's two types of fear. There's the fear of loss, and then there's a fear of missing out. And again, I can't recall the stats, but I know that people have done studies, and fear of missing out, where you wanted to buy and then it rips higher, is actually more painful for most people than taking a loss to the downside. So people generally will make decisions because of fear of loss or fear of missing out. And we've been trained since we were kids. Don't touch the stove. Don't swing like that. Don't eat the dirt. Don't put the grub in your mouth. Like we've been taught our whole life to not make mistakes because our parents have done it, and they want us to not have to. You've got to touch the stove, right? At some point, you've got to touch the stove. So that's just the nature of being a person. Now, those emotional states carry on. Markets are the most counterintuitive things, because if you bring your emotional hardware, which is subconscious, you will lose money. Our brains are perfectly designed to lose money in markets. If you do what you think you should do, you will lose, because you wait until it feels safe to buy. When does it feel safe? When the market's doing this and everyone else is piling in. It's been green for 2 years. And as there is no better example than this. I don't know about you guys, but this market cycle, so 2023 onwards, I've had no phone calls from muggles, people who don't own this stuff, asking, should I buy Bitcoin? In the last 3 weeks, I've had 12, 13 calls from people who are already in this space asking the best way to take leverage. Taking leverage at 100K, fellas. The best time was at 20K, but it felt horrible back then. Right? So people want to feel safe when they make a decision, and that's almost always the exact wrong decision. And we were talking just before we hit record, when we were selling off down to 75K. In fact, sorry, I was talking to my mate earlier about this. we were selling off to 75 recently, and I'd been writing to my subscribers. There was this zone between 86K and 75K. We're trading at 100 back in January, February.
Yep.
And I said, guys, look, if we look at where all the coins transacted, almost nothing happened in that pocket. We just went straight from 75 to 90. There's nothing in there. And I said, that zone is just imagine the pain of going down to 75. People will think it's all over. So I was talking about there's a lot of sell side because you can see old coins coming back to life. You can see a lot of people, the Twitter folks, buying and saying, we're going up, let's go, 100, 200K incoming. And I was like, guys, that 86 to 75K pocket, I called it an air pocket, just be ready for it in case it comes. And again, I'm not predicting the future. I'm just saying, think about it beforehand. Eventually, we went there. So we sold off down to 75, and my mate at the time, he walked past, he goes, mate, you look a bit green. I said, I just put way too much money in, but it felt awful to do it.
Yeah, it was gross to buy that.
It was gross, but I knew in my instinct that it feels absolutely awful to buy. It's almost always a good time.
Yep.
When it feels great, it's the worst time. And back to your original question, we can look at metrics and you will see this time and time again. People who bought at 110 the first time, they were capitulating like crazy at 75.
Right.
They were selling all their coins at a loss.
And is this like clockwork? You see this
Like
quite
clockwork.
frequently?
So what I saw as we were rallying higher, the smart money who bought at 50K and 30K and 20K, they were unloading at 100.
Yep.
The speculators and the people who wanted to make quick bucks and were going at 200K, they bought at 100 and then they sold at 75. And then me, the humble hodler, I bought at 50 and 49 and whatever in 2024. And then I stepped back in at 75 because that was the next time that the dumb money capitulated at a low point. And you can just visualize all this stuff.
Yep.
You can see the profit taking, you can see the old coins, and you can see the people who bought those coins capitulate to me, and then away we go.
Yeah. No, such a simple and easy to understand message, right? When you feel horrible about it, it's probably a good thing, right?
Totally. If you're gut wrenching, it's probably a good buy.
Because I've had to learn that the hard way, and even now I've been in crypto for 4 or 5 years, and it's like you can't get rid of that feeling.
Totally.
And no matter how much you believe in Bitcoin and the industry and whatnot, you're going to get that feeling no matter what when it's dipped 30% and everyone's being negative about it. You're naturally going to have that.
And the way that I reframe it is, having been a hodler for long enough and buying enough tops, right, going through that experience, if I can just reverse my behavior pattern and not buy when all the smart money is selling, wait for the 30% correction that we all know is coming.
Yeah, it always comes.
It's always
like
coming.
Yeah.
The Omega candle is never coming, and if it does come, it's usually red.
Yeah.
So once the Omega candle comes, instead of having deployed all my dry powder at 100, I can now go and say, well, 75, it feels horrible, but even if it goes from 75 to 60, at least I'm not long from 100. At least I'm long from 75 now.
Yeah.
So my unrealized losses are never going to be as bad. And you just shift everything a little bit forward, and it makes it so much easier.
No, I love that. And you were in Brizzy for an event tonight, I know. And we've just been speaking to Joe Shu, who said the topic of that event, or the topic of your talk, will be about the difference between a pullback and the end of the cycle. So a pullback, for instance, like you just mentioned, 30%, like we've seen on Bitcoin countless times, and the end of a cycle where, you're looking at 2 years of bearish sentiment when it comes to crypto. So what are the key things you look for, and how do you sort of educate that to the layman?
Yes. No, this has actually been a real learning curve for me as well. So the other thing about on-chain data is it's still very unexplored. And I would say that this is the first bull market. I know a lot of people talked about on-chain back in 21. The truth is, very few people knew what any of this stuff did.
Okay.
Yeah, very, very few people. So in that 2021 cycle, I think there's a lot of people who kind of got the wrong message about on-chain. They mistook a couple of bad calls for the whole discipline, and rightfully so, because a lot of people got stuff really, really wrong.
Yeah.
My job as trying to work out what this stuff did is through that whole process, through the bear market, me and my team tried to work out what this stuff actually does, right? How do we actually use these tools? And part of my learning, so this is the first bull market that we've ever had with a full toolbox and an understanding, at least a cursory understanding of what this stuff does. So really, this is the first stress test. And the lesson for me this cycle has been trying to make this distinction because we've had two major corrections. One in 2024, we chopped sideways for 8 months. I called it chop solidation. And then we've also had in this current market cycle, we've just had a 30%, 32% pullback, the deepest so far. Now, why these corrections are different. The market cycle has actually changed quite a bit. A lot of people like to use the 4-year halving cycle. If I can recommend people, punt that out the door. It doesn't work. It hasn't worked.
No.
In my opinion, there's actually been 3 cycles. The first one was Genesis through to 2017. That 2017 top was a real dividing.
Because it went vertical that whole time when
Correct.
you really
And
look at it.
more importantly, Bitcoin became a household name. It wasn't now this weird unknown thing.
Yeah.
So Genesis until 2017, I would frame this as the world was reacting to Bitcoin. And you can see this in a lot of metrics. They all trade very similarly through that period. Initial adoption, we barely have a trading view chart. There's no institutions. It's very just gut feel retail. Send money to Mt. Gox and hope it comes back, that kind of stuff. From 2017 till 2022, if you look at a lot of metrics, very boom bust, straight up, straight down. 2019, 2021, just these massive boom bust cycles and compounded by leverage.
Is that the VC era?
It's the VC era. It's the, I call it Schrodinger's Bitcoin because it was simultaneously alive and dead. Bitcoiners knew it was going to make it. Everyone else thought it was dead and it was going to get overtaken. So it was in this kind of like estuary of trying to work out, what is this thing? With leverage. And then 2022 was just a forest fire, cleared everything out. There was no leverage left. No one survived that. And then you have this just like really slow and steady, the behavior of the oscillators I look at, very similar to 2017, but more mean reverting, like a beautiful sine wave. Like it's just found this new resonance. So something about this cycle and the way I've been framing it up, this cycle is no longer we're reacting to Bitcoin as a new interesting thing. Bitcoin is now being used to respond to the world around us, right? People are using it to trade off sovereign debt concerns and, incompetent governments and you name it, like where people, inflation, whatever it is. So Bitcoin is behaving more like an asset that is responding to the world rather than the world responding to Bitcoin. Now, within that context, and back to the original question of drawdowns, these drawdowns have been different because they've taken a lot longer, but they're not as deep. So if you go back to 2017, and that's the closest equivalent market cycle. Both are very spot driven. This time because the ETFs are a big factor, but back then we literally didn't have futures. So very spot driven. But if you had a long weekend, right, and you went out on the source and you came back one night, you wouldn't even know that we had a 40% correction. It was over, right? It was like a 3-day event, mission accomplished.
In
2017.
Yeah.
Same depth, sometimes deeper, but they didn't last. Now we've got this duration time pain where a correction takes 8 months. But we only go down 30%. The amount of bear calls that I've seen, because people are just bored. And this is why I call it chop solidation. We go nowhere, and yet long and short traders are liquidated the whole way through it. And eventually you're at the exact same price, and there's just like the bodies of traders all over the place. So these kind of conditions are very different. So the way I've been distinguishing a correction from a bear, it actually comes down to the damage. So with on-chain data, because we can see when everyone acquires their coins, as a Bitcoiner, you buy, price goes down 5%, another day in the office. You buy and it goes down 30%, you're feeling a bit rough. So take that idea and look at unrealized losses. If you look at what I call the shot across the bow, the first sell-off that actually kills the bull. In 2017, it was that one that took us from 20K to 6K. In 2021, it was actually, in my opinion, around this time in 2021, we had that sell-off from 50K to 29.
None of that.
Destroyed sentiment, really horrible, just nasty stuff. That sell-off plunged, the unrealized losses shot through the roof. So suddenly you've got all these bag holders, top buyers who are so underwater, it's shattered their sentiment and now they're looking for any escape. In these corrections, we've only got these tiny, like you almost have to squint to see the unrealized losses. So yes, we went to 75, but most people didn't buy at 110. They bought at 90. 90 was that central zone. So 90 to 75 is still within the Bitcoiners' day in the office type environment. So it's trying to understand, like, how bad does it have to be using those previous reference points, those shot across the bows? We never know. But I know that was enough to destroy sentiment. Until we get close to that, I'm sanguine about it being fairly more of a correction than a bear.
One thing I've noticed from your work is you like to sort of break up the segments of the market into phases.
Yes.
How could you best describe, where we've come from, what we're in, and probably what we're going to be moving into?
Yeah, good question. So let's start, I think from 2023 onwards is the right place to think about this. And there's a few on-chain models we can use to actually frame this all up. The first one's called the true market mean. If anyone's spent any time talking about on-chain data, you've probably heard of the realized price or MVRV. Dave Puhle and I did a study called Cointime Economics. It's like 120 pages, the nerdiest stuff you ever find, right? Anyway, the realized price is supposed to be the cost basis for the average Bitcoiner.
Yep. But
it's actually not. It's the cost basis per unit of Bitcoin, which means Satoshi's in there as well.
Okay.
So if Satoshi at a break-even level, Satoshi was up like $35 billion. To be break-even, some other guy's got to be down $35 billion in aggregate.
Right, okay.
So, but Satoshi can't respond, that guy can.
Yeah.
So we found a very elegant way to actually look at the active cost basis for investors who are moving around in the cycle. We get rid of all those lost coins.
Right.
Now, that level, if I was just to ask you, if you can think back to the previous cycle, 2020, 21, where would you say the midpoint was? What was like the middle price of that cycle?
Oh, like 40K?
Yeah,
45?
I'd probably say, or maybe even less.
Mid price in terms of days traded?
Just like gut feel. If you were to draw a line straight through the middle horizontal, where would that approximately be? You're close at 40.
Yeah.
38, 37?
So 30K. 30K is quite literally the midpoint.
Okay.
And that's this true market mean price. It's actually the perfect mean reversion model. Bitcoin has spent 50% of its time above, 50% of its time below. It's a crazy statistic. The ratio between those two, the long-term average is 1, the long-term median is 1.
Right.
So we invented this metric from a fundamental basis. It as the average cost basis for active investors. Turns out it's right in the middle. It divides bulls and bears. So if you can now think back to 2023, FTX is blown up.
Yep.
Everything's over.
Yep.
We're down at 15K.
Yep.
We traded up for most of 2023. We had the SVB banking crisis. We spent about a year or 8 months or something chopping sideways. The ceiling of that was that true market mean, 30K.
Right. Okay.
So that's the initial recovery phase of a bull cycle.
Okay.
We've still got a lot of PTSD about the bear. Every lower high, you're like, oh man, it's coming back. It's coming back. So everyone, like, there's a lot of loss. Every time it sells off, you see it on chain, people panic sell.
Yeah.
Because they're afraid that the ghost of Sam Bankman-Fried's coming back. So there's a lot of sell side in those events. But once we broke above that, next thing you know, we've teleported to 45K.
Yeah, didn't slow down.
ETFs come live.
Yeah.
And then we're at 73, right?
Yeah.
Previous all-time highs. And everyone's like, whoa, where'd that come from?
Yeah.
Then we chopped around for 8 months. And this period, people now believe the bull is back. But also there's still that doubt because people calling a bear market in 2024. They thought it was all over and then, it's the worst cycle of all time. But when you look at the unrealized losses, it just wasn't that bad.
Okay.
Once we break previous all-time highs, which we did in November, we move into a whole different phase. That's call it the exciting phase of the bull. I think I call it the enthusiastic bull. Mm-hmm. People now believe we're going up and some people are going to start de-risking. And we start seeing the higher we go, the more people sell. Not everyone, but enough people to overwhelm demand. And then you start getting these corrections which are deeper, sharper, angrier, scarier, shakes more people out. But that also pulls the slingshot back that if it is in fact a correction, not a bear, it keeps going. And then those people FOMO back in later on.
Right, okay.
So we're in that phase.
Okay.
Now, my view is that we've broken to all-time high today.
Mm-hmm.
I think we're getting closer and closer. 13 people have messaged me, asked me how I take leverage. We're getting closer to the euphoric phase of the bull.
Yeah.
And this is where a lot of people get lost here. So my current levels for where we're going to be overheated is about 150 to 160K. Now, that doesn't mean we're going to go there. It's not a prediction. But if we go there, I use two personas when I write. Check the hodler, who's us, and check the analyst, whose job is to be very objective. Check the analyst cannot, in good faith, at 150 or 160K, cannot say, guys, we're fair valued. We're going to be really overheated by every metric. But that doesn't mean that we can't keep going. At 150, 160K, all it means is that there's only a 5% chance historically that we keep going. But that 5% is where it's going vertical.
Yeah.
So that 5% is the most exciting phase, and a lot of people will not believe it, and they will not understand that people are going to sell. Eventually, the market will top out. It will eventually.
Yeah.
But people are going to think it's a new paradigm. So we're in that phase of like, I think curling into that exciting phase, which is both the most wild, but also where things can, if you lever up too much, it can end nasty.
Yeah. Mate, I reckon I could have you on the podcast every week.
Yeah.
I think we might have to arrange that. The Ghost of Sam Bankman-Fried was a personal
That's a
favourite.
good one, yeah.
Mate, we could honestly go all day with you.
I do go
reckon.
all day.
Yeah.
This is what I do for a living.
Like we're definitely gonna have to get you back on because
sure.
there's so much more to unpack. But James, we might leave it there for today. We'll definitely chuck a link in for the Check on Chain, your platform and
Where
community.
people can find you.
Yep, and your socials as well. But yeah, mate, thank you so much for coming on.
Thanks, lads. It's been a pleasure.
Yeah, mate.
Thanks, James.
Thanks, guys.